hallelujah. You're not
Yes,
kidding about
sir.
that. I second that as much as I think you all do. And so we're right around the corner. We do want to finish well. And to finish well means we want to stay tuned for the next few weeks. So I'm going to pray for you, then I'm going to check in with you before we get into our income statement and balance sheet chart of accounts. Again, you're expected to have some competency in this neck of the woods, and so we're going to push through this week, next week, and the week after next. Session number 4 is really going to be about your PowerPoint. You're going to rough draft PowerPoint. So you should be thinking tonight and for the week what it will look like to, at minimum, pick a wallpaper and start laying out your PowerPoint presentation, because during session 4 you're going to have an opportunity to bring that on your flash drive, send you one by email in case the flash drive doesn't work, and come in here and show it to me, and then give me an idea of what you're going to be presenting the following week, and I'm going to give you privately. The other teams will be stepping out the library. I'll open up the office area where I do have an office, and you'll be able to come in here and into those other places and practice, think about whatever you need to do before you come in here and work with me. So that's coming in session number 4. So I'll talk a little bit more about that once I bless you with prayer. Okay, so let's pray. God, I do thank you for tonight. I thank you for this day, for this is the day that you have made, and I do, as those in this room, I pray, rejoice in it, for it's a day that you created, and I thank you for that. And I know that we are people of anxious hearts. We are people who are concerned largely more about tomorrow, next week, and the next month than we are about today. And I pray that in that stead that would come a spirit tonight that speaks specifically about focusing and concentrating on tonight, for the purpose, first of all, of bringing you glory and then joy to others. So I thank you. I do pray as your servant, as the one that you have called to teach this class, humbly before you, O God, that you would intercede on behalf of each soul in this room. And as I think of that, I think about their families, I think about family dynamics, I think about children, I think about interspousal relationship and significant others, and the stress and the blessing that can come from all of those thoughts. And I pray that you would intercede and meet each person in a remarkable way this night and this week and the weeks that pass. Pray for their work, pray for the work that they do in this class. I pray for them specifically, that your grace, which is sufficient, would draw and fall mightily upon them. And God, and I pray that the work that they're doing to be a blessing to those in this community, or maybe in S&P 500, Father, would bring you glory. So this night we give to you, I give to you, in the name of our Lord Jesus Christ, amen. All right, you pray. Thank you very much for praying with me on that. I do have up here, by the way, before I forget about that, good examples, 3 at least good examples of minimum standards of what I would be looking at for your presentation booklet. These are not to be taken out of the classroom. Some of you are going to be tempted to ask me tonight, can I take this home with me? No, you cannot. You can take your camera, you want to take pictures, that's okay if you want to do that. But I will cover some of the elements of these books. I'll bring more in as the weeks pass. There'll be examples of things I would not want you to do. I'll give you some more examples of what I think you should do are probably going to be better for you than what you should not do. So these will be up here for your inspection just a little bit later. I also have planned to bring tonight your final exam from your last class. I left that on my conference table today. I will bring that next week, so you'll be able to take a look at that if you are interested in so doing. So let me survey you. Who does not have, let's survey, what member, strike that, what group in here does not have a local business or business that's a sort of an entrepreneur, non-S&P 500? What group in here does not have that? How many groups? One, is this one group or 2 groups?
This is one.
One group?
2 groups.
2 groups. So 2 groups are non-entrepreneur S&P 500s, is that correct?
Meaning
Well,
we
we
have
haven't
not-
heard back.
You
from
haven't heard
one.
back yet.
Like, we've gotten 2 no's and we have 1 that.
Let me reframe that. Does that mean every other group has got a business? Every other group has a business, so you 2 don't. Where are you at again in the assessment of whether this entrepreneur is going to let you do this or not?
Well, Crystal said she's waiting to hear back yes or no from Razalicious.
We've both gotten no's from who we've asked, farmers and her sisters that business. So, yeah.
Got it, okay. All right, so when are you going to say, you know, this is the line we're gonna draw in the sand and we're not gonna go beyond this?
Probably tomorrow, like,
Highly advisable. Don't go any further than that. So let tomorrow be the drop dead date, okay? Where you guys at?
We had a firm yes until earlier today.
Yeah, until
Yeah.
she read the questions.
So she heard the question. So we
And
have.
she ran screaming for the hills.
It's true. She hasn't been seen yet, so we'll let you know. We have a few other options, so we're waiting to hear back. But likewise, if we don't hear back by tomorrow.
Yes, I would let tomorrow be the drop dead date in it, so that you can pick an S&P 1,000, 500, doesn't matter what it is, as
Okay.
long as it's something that's public. You wanna make sure it's got a public orientation, so you can do some work behind the scenes, with, trending. That would be of value. Okay, what business?
Mount Communities Healthcare District, Trina.
Standing, very good, wow, that's a big deal.
Which it has turned into, because when requesting other hospitals and other critical access hospitals information, we just needed, one or two.
And you got,
6, because they all wanna know what the outcome is of this little school project we're doing, so we're now petrified.
as I can
But
imagine.
we think pretty good.
You got 4 in your group?
Yes.
All right, you delegating?
Mhm. Absolutely.
Oh,
Yeah,
yes.
good group
yes.
dynamic.
All right, great. Okay, what about others? Group in the back?
Jill, we're split.
Somebody speak up.
Okay. Those two and us two. We have SCT, the Chrome Shop in Corning.
Okay, great.
And we already have the financials are set to be here in the next couple of days,
Put a drop dead on that, date on that, so you don't,
Wednesday.
Don't-
Yeah, she
Hold
goes
on.
down and does the books for the week on Tuesday night. I'm hoping she's printing this stuff up tonight. I will
okay.
contact them tomorrow.
Yeah, that's really urgent. You wanna get your
Yes.
eyes on those as quickly as possible.
Yes.
Likewise, you wanna get your eyes on the financials as quickly as possible. I'll help you with these, so we'll work together on that
Thank you.
and be collective on that. So that's your group?
Yeah,
Yes.
just a note on that, it's called the Chrome Shop, but it's actually a retail business. He actually sells parts and accessories.
Got
It's
it.
not a garage like you pull your truck in and
Yeah,
whatnot,
I
okay?
mean, you'll have an opportunity to explicate that more thoroughly
Yes.
as we go on, but, that's good, looks excellent.
Our group here, we have a business in Red Bluff named North State Blinds and Draperies.
Cool,
Nice.
lines and draperies, retail.
And we have all their financials already.
Outstanding, nicely done.
And we've done an interview already.
Whoa, man, you're knocking the socks off. You guys are probably dreading a full tent. Oh man, where did we miss out? Okay, so that's 2, third. We have 4 groups or 5 groups?
I think we have 5 groups. We have
Five.
a couple of groups of 3 and then some of 4
Okay,
and some
so
of
that means
5.
one more group. What's the other, the third group has got?
You have.
Oh,
the-
5. Two
So-
of us are unsure.
Okay, so we have 5 groups.
Yep.
2 of you do not, 3 of you do have a business, I've heard. 1, 2, 3, that's right. Brain just came on, okay. So good, all right. Okay, great, so that's exactly the outcome I would expect at about this time. That is, you know what business you're gonna be doing, and if not, you have a backup plan within 24 hours of today. I think that would be worth noting. Does that make sense? Any questions so far in this process? Yes.
What kind of paperweight would you like us to use?
So I'm gonna talk a lot about that as we get a little bit closer. You'll have an opportunity to take a look at these tonight and get a feel for that. But I would say anywhere between at minimum 24, at maximum perhaps 28, right in the neck of the woods. Okay, yeah.
And, okay, so Reading Printing did not make those. Are they from Office Depot? How are you getting the?
Yeah,
printing?
again, I'll come back and I'll talk a lot about that.
Okay.
Great questions. For the booklets, hold your thoughts on those. I'm gonna be spending a lot of time on that part of the element a little bit later.
Non-booklet question.
Thank you. Appreciate it very much.
Just wanted a disclaimer real quick. You're wanting, if possible, the owner or CEO to attend the final night.
I love that.
Is there an advantage or disadvantage if they show or do not show?
To our grade.
To our grade?
Well, I knew that was behind the question, so that.
With all due respect.
With all due respect.
our students, right?
Gotta love this girl. And nothing, I hate this,
I-
at the end of the day, I hate that. And the final analysis, it is helpful, but it's not a determinant to your mark, okay? So I would prefer that.
He will travel from Weaverville if he needs to.
So, okay, that's great, that'll be super. If you can do that, that'd be wonderful. If not, his surrogate.
Okay.
And that's okay too. So that can be anybody with, some degree of power in that organization. That would be great. But don't tell me that's you.
I'm thinking, is the director of HR okay? 'Cause
Hey, she'll be here.
she'll be here. Done and done.
So that would be my
I'll
preference.
have
To
it.
answer your question with
I'll have
specificity, then it doesn't really have any bearing on your mark.
Okay.
But I will tell you, it does play in on your presentation.
I bet, yeah.
Totally does. I'll tell you why. Well, one of the elements that come out loud and clear when you've got an owner sitting in the back, particularly with a group of this size, is you get fantastic eye contact on the reference person you want to have eye contact on. When he or she's not there, then you begin to have eye contact with the audience out here, and it's not quite the same connection. That's the downside your S&P 500, 1000 are going to have. And I will tell you, because of that, the pressure will be on you just a little bit more. Not because of you're going to have more work, you might, but not because of that. Just because it's not quite as interactive when you don't have a principal here to speak to. Makes a difference. Question? Any other questions? Oh,
Our business owner, he would love to be here, but the only way he can is if we go first, cause he has an appointment at 7, so.
Got that.
May we ask to be first?
you're an innovator, early adopter.
So
So because you're an innovator, early adopter, you got it, Nico.
All right.
You're number one. Good point. Yeah. It's
What's
called the
that?
law of diffusion of innovation. So you, good, yeah, so because of that, because you've innovated that question real early in the game, we'll set you up number one. Let your owner know that right away. That to be here at about 5:45. Make sure you have somebody in the outside position, principally better by the tower. It's a place anybody can find when you get on campus, and have them walk here. If you say Le Bon Redot, you're likely to lose them right out of the get-go. Okay? So have somebody out there meet that person, text them into this direction, you'll be good to go. Okay? So we have the number one slot then done. For the rest of you who are wanting to think about slotting in, let's not go there right now. But the first one, I think that'll be fine. So, yeah. Any other questions? Any other thoughts? Okay. What do I mean by capstone project, by the way? What do you mean by that? What do you think is meant by capstone?
Culmination.
Culmination of what?
Our entire
Yeah, it
education.
is. Bring it together, bring it on as best as you can. That's gonna be where a lot of point value is gonna come from. Bring it on. So, okay? All right, if you'd then get yourself ready to construct an income statement and balance sheet. I think tonight's company is called Belmont Manufacturing. I'd like you to set it up the way that I set up last week's. The title, the way it was titled last week, where you have the name of the company, the balance sheet, or income statement, and the date. Make the date 12/31/2000. 12/31/2000. 12/31/2000 is the date for the income statement and balance sheet, year end 12/31/2000. This income statement tonight, I want you to assume that this is, there are no taxes, no interest. No taxes, no interest. That'll change the outcome of how you lay out your income statement, if you remember last week correctly. You know, you just caught what I was just thinking, that is incorrect, you're absolutely right, there is an interest in tax expense, so, good catch on
Isn't
that.
this the same one that we did last time?
Is it Belmont? Did we do Belmont last week?
Yeah, so, these are the same numbers that we had.
Is it
last
really,
week.
the exact same one?
Yeah. The one for this week is sharp.
Well, you've done, you've actually did an exercise in futility, and so did I. So for that reason, this one goes away, sorry about that. So this one should be sharp.
Yeah, there is one
Oh.
for this week, sure.
Yes, it is, my mistake.
You found it?
I thought that was awfully familiar,
So I was
so.
gonna say the 1231 sounded familiar from last time.
What was it, 2010, I think, last week, right?
Yeah,
So
But it was Belmont, because I looked back at my notes and was like, wait.
Good catch. So that's what got me here, was I saw that the expense for interest and taxes, the one this week doesn't have that, if I remember correctly, it does not.
Okay.
All right, sorry about that. So,
Sorry, guys.
tear up the stuff you've been doing, good catch. My bad. This is sharp.
Is this also for 1231?
Yeah, we'll just keep the same.
Okay. I like a pencil right now.
Oh, I gotta get rid of the end.
As managerial accounting students, the first statement you should work on is which one? Right, income statement. Work the income statement first. Process elimination, it'll help you with the balance sheet. All right, let's begin to attack this, so that we can, build both an income statement and a balance sheet. What's the term I, asked you to be thinking about when you're considering liquidity of assets on the balance sheet? What's the term that I use? Fungibility or fungible, what does that mean? What does fungible mean? The ability to liquidate, the ability to get at cash quickly, right? That's an important construct over here. Last week, what did I mean by the distinction between current and long-term? What does current mean? Within a year. Accounts payable typically are gonna be done within a year. Notes payable, mortgage, would that be current or long-term? Long-term, does that make sense? Okay. Those two terms are gonna be important too as students of evaluating businesses' income statements and balance sheets. Now, when we begin to attack the balance sheet, we always, of course, work with what we call our top line. Our top line, I referred to that in our last class. Our top line is our revenue. Our bottom line, of course, would be our net income, which would be our profit. But our top line on our revenue is clearly going to be something delineated with either revenue or sales or net sales. Now, last week when I indicated that the sales reflected in Belmont had it defined as net, what did that mean? What did net define this particular company having at issue?
Returns.
Chargebacks or returns, that's right, chargeback or returns. The technical term is chargebacks, chargebacks. It's more technical in nature because it speaks to this notion of charging something back after making a sale, chargeback. Therefore, this company is denoting, instead of just sales or revenue, in its income statement balance sheet, it's calling this net sales. It would have asterisked the amount of sales that were offset by chargebacks. Make sense? Okay? That would be a red flag I talked about last week. Because if that ratio, the difference between sales and net sales, is high, particularly by way of benchmarking industry standards, we know we have a TQM, I'll talk a little bit about that tonight, usually TQM, a total quality management issue. And that total quality management could include problems with the product and or the service, right? People want their money back. Okay? So here we see the top line then reflected as net sales. And we know net sales is a whole lot different than cash. Why do we know this week that net sales is not the same as cash? This is money in the bank. This is money that it took a lot of effort, including inputs, to get, right?
Yes.
This is after the fact. This is as you go fact, right? This is banked away. This is coming in and then what? Going out, right? Very fast. Therefore, is this an asset or is this revenue? What's the word? Asset or revenue?
Asset.
Asset. Now, it may have been a revenue at one time. It certainly was a function of revenue, but after we subtracted all of its costs and it came over here, cash. That's what we have, cash sitting there. Definitely an asset, not sales. It used to be a function of sales, but not booked as sales now. It's booked as an asset. Therefore, we know our top line here is net sales. The net sales reflected here are $800,000. But it takes something to produce something. If you're in the service industries, it does take something to produce the service you're rendering, right? And as well as in the manufacturing industry and even in the retail industry. There's always some sort of an input or a series of inputs required to construct, build, and get ready for sale. We refer to that as cost of goods sold. You learned this week in your homework assignment how to build cost of goods sold. With beginning inventory, actual inventory minus purchases equals ending inventory, that kind of construct. That's what gets into the cost of goods sold. Here, you don't have to worry about calculating cost of goods sold like you did on this week's homework. The chart of accounts gives that to you. They did the calculation for you, and the amount we have to offset our revenue by in order to get what we call gross profit or gross margin is our cost of goods sold. In this case, that is $500,000. That $500,000 is coming off of our revenue because it's money, energy, effort, life, in some cases, that were used in order to produce the good and or service, the sales. We have to offset it. And when we offset it, we get then at our, known as our gross profit, gross margin. Gross profit, gross margin. This is not what? What did I tell you last week not to call this?
It's not our profit margin.
Not our profit margin. That's right, Joe. You're right on point on that. It is not profit margin. It's gross profit or gross margin. Not profit margin, gross profit and or gross margin. It would be incorrect for you to say in your presentation or to the owner to refer to the line item after subtracting cost of goods sold as profit margin. That is not profit margin. Profit margin is a phenomena wherein you are taking a ratio between operating income and revenue. This line down here and this, not this line and that. So this is gross profit or gross margin. Gross profit or gross margin here is how much? $300,000. That is the difference between that. Now we'll stop there, and the managerial accounting student is going to ask him or herself, that's fine that I'm looking at this income statement from this business, It's not telling me a whole lot about this business in general because we don't have a peer comparison. Is that right? We don't have anything to benchmark, assess it by way of best practices on how well this particular company is doing. Moreover, the dollar amount is problematic because the dollar amount becomes nebulous. The better way to approach this is by way of vertical analysis, and that's taking this and dividing it by the total. 300,000 divided by 800,000 times 100 equals the percent, whatever the percent is, the ratio is of this divided by that. That percentage is the percentage that's talked about in industry readily. When you hear people talking about what's your gross margin, what's your gross profit, what they're really asking you is that percent, that ratio, the ratio between the gross profit, gross margin, and the revenue. That's why it's always very helpful then to, by way of vertical analysis, reflect what that percentage is. 300,000 divided by 800,000 times 100 equals what that percent is. It's helpful to do that for any other reason, to at least get at what that percentage is for the purposes of peer comparison. Peer comparison. If you don't have peer comparison, what can you do? We talked about this last week. What's the solution? We call that, by way of technical term, past performance. Past performance. You want to articulate it as past performance. The way we can assess this is we can come up and take a look at what you did in the previous years here. In the previous years, this divided by this. In the previous years, this divided by that. Get the percentage in the previous years, take a mean or average of those percentages, and that becomes your peer, your benchmark. Does that make sense? Now, that would be a bit problematic if we were sitting here in class and we were in 2012 because we had just come out of what? The Great Recession. Would the Great Recession's past performance be indicative of best practices moving forward? What do you think? Probably not. We would therefore have to go back a lot further than that to come up with an average here consistent with peer comparison or past performance comparison. Does that make sense? Yes, Joe?
How many years would you want to use for the past performance?
3 years is good.
How many?
3 years is good, and probably long, frankly, in the environment where you're in. Things change that fast. But in my example of the Great Recession sitting, in 2012, and someone using past performance as an indicator of benchmarking, is that you have to take into consideration the impact that the recession had on that business, and you would not want to prognosticate that moving forward. You would not want best practices in terms of gross profit or gross margin reflecting an average coming out of a depressed market. You'd have to go back much further. So 2008 was the start of the Great Recession. You would then argue maybe we should pick up 2007, 6, and 5, those numbers, weight those numbers a little bit more than the numbers between 2008 and 2012, and come up with a past performance benchmark that makes sense for a peer comparison. Does that make sense? The good managerial accounting student knows that if he or she doesn't have access to good peer comparison numbers because they're not a public organization, then past performance is the methodology we use. Past performance is not difficult to do. You ask the owner, give me your statements for the last 10 years. Pile them on top of you and you got them there. So you would look at, for example, this number, that number, or that number, do the vertical analysis at least right here, compare over the 10 years, put them in your spreadsheet, and boom! Take an average and you got yourself an analysis. Okay? I'll talk more about that and I'll get at that as we move forward, but it's not a bad practice. The better practice is benchmarking. How do you get at benchmarking if you're a publicly held company that has 500 stores, strike that, has 1,000 stores that are almost exactly as the little independent mom and pop you're doing your project on? How do you extrapolate that data, do you think? How do you get at getting that 1,000 store balance sheet and income statement sent by SEC reports at the end of the year and distill it down on their side to a one store phenomena? How would you do that? How do you think you would do that? That's exactly right. It's not that difficult. It's not a whole lot of science, is it? The public statement says these numbers are predicated on 1,000 stores that we had in 2016. Do you see the analysis? It's not that difficult. It's easy, frankly, to extrapolate when it's a publicly held company retail environments, wholesale environments, manufacturing environments, on a per unit, per manufacturing facility, per retail, doesn't matter what it is, to begin to extrapolate that. The challenge is getting the SEC documents, and you can get those. That's a bit of a challenge. Sometimes you have to pay to get some of those. Most of the time they're public, and you have a right to get your hands on those. So you can print those off, look in the narrative about how large of an organization or how many units that they have, and do a little bit of math, do a little bit of extrapolation, and come up with your peer comparison. That's how you would do that. All of you should have that capacity. Coming through this program, sitting here tonight, nearly graduating, to be able to do that. All of you should be able to do that. Every one of you should not be troubled with extrapolating that kind of number. Does that make sense to all of you? So past performance can get at this. Better is if you can find published what an income statement would look like, very typically for a balance sheet, typically for the kind of business you are consulting with, that may be either published or you can get your hands on. Franchise organizations, are they willing to let people who are not part of the franchise organization to release numbers to you, the general public? What do you think?
Probably not.
Usually not. That's a tough thing to do, isn't it? That's very proprietary, and they're going to keep that in great confidence, largely because that's a selling tool that they only want to present to an audience willing to pay a franchise fee, right? That's the bottom line on that, not to somebody who wants the general information. But can you get a number like that? Yes, you can. It takes a little bit of work, but if you cannot, what's your backup? Tell me, what's the backup? Say it. Past performance. Okay? Okay, that's your backup. If you can't, that's your backup. Make sense? Therefore, I would be expecting, by way of an expectation, delineated in your handbook and in your presentation when you're talking about benchmarking and/or peer comparison, the methodology you use to get at that. Does that make sense? He or she sitting on the back will want to know that too. Yes or no?
Yeah.
Why would they want to know that? Well, why does the person sitting in the back who owns the business want to know in this presentation how you got at the peer comparison?
To know how
This makes
they
a
compare
difference.
against other business.
Right? What else?
For the future, prepare for the future.
Prepare for the future. What else? Why would they?
If you're comparing to a competitor versus your past history, those are
Two very different
very
things. So that's number one, right? And so they're going to want to know at minimum, how'd you come up with that? Is that some sort of arbitrary number that you came up with here that you as students of Simpson University decided to pick that I need to aspire to? No pun intended to the aspiring, right? Or is this a number that is gleaned from industry that is a best practice benchmark I need to aspire to? That's a whole different motivator for a business owner. Yes.
What do you do if there's like you're doing a really new business who's maybe only 2 years old, and there's not a lot of other big businesses or well-known businesses that information is available?
Something so innovative, so new, is that what you're saying? So unique
Yeah.
as a business that neither do you have a large industry that it would have a number of stores that you could do the work, the manipulation I talked about, or even past performance to be able to do. That's a great question. It's a difficult one to navigate through, but not impossible. Not impossible. So I'll talk more about you in your private group on how we can do that, how we can get at that to make that happen.
That's probably an issue we're gonna have as well with our business.
How old is your business?
He's 8 years old, but there's probably not much pure information available.
Maybe, but he certainly has past performance.
Yeah.
And I would therefore, if you think you're going to have problems with benchmarking, I would ask immediately, get us the 8 years of financials so we can use past performance extrapolation to figure out what your best practice should be in the future. And you as consultants come up with what the gross profit, gross margin percent should be by way of best practices and argue why. And what you would argue is, based upon what you did over the last 7 years, taking an average of and moving towards this, assuming this is in order and that's in order, we think that your gross profit or your gross profit percent should be articulated. Make your argument. It doesn't have to be right. If you learn anything in business law, you learn that when you get down into your analysis, whether the defendant or the plaintiff is guilty or not is irrelevant. It's making your argument. The jury can go either way. If it's a bench trial, the judge can go either way. That's not the issue. It's making the argument. Make the argument, right? Make the argument. That's what's key. Okay. Yes?
Okay.
That's right. So your conclusion is really irrelevant to a large extent. But the guy sitting in the back wants to make sure that whatever you've argued makes sense, even though it may not completely and totally. He's going to either trust, or she's either going to trust in that or not. They're paying you $25,000 to consult, which is, you know, somewhere in the going fee for good consultation for the major consultation groups in America, 25 to 100,000. They're gonna listen to you, and they're gonna take your recommendation, and then they're gonna give it a try, right? Now, our operating expenses then are need to be calculated: our labor, our rent, you know, utilities and whatnot. And here we see that denoted as operating expenses. That makes it really easy, doesn't it? Really easy. So one of the items we're going to be looking at here in the operating expenses section is what's defined as operating expenses. What we have denoted there is $280,000 as operating expenses. Do we have anything else up there that is denoted as an expense? Anything else denoted as an expense up there that would be worth noting?
Accounts payable.
This is a trick question. I want you to be thinking about this. Somebody said accumulated depreciation. What do we accumulate? What do we depreciate when we do this? Do we appreciate an asset, or are we depreciating revenue? Which are we doing?
Asset.
Therefore, if it's an asset, where does it belong? Does that make sense? Let's throw that one out. What else could be possibly incorporated in the income statement? What are the
Accounts payable.
accounts payable? What does that sound like to you? Does that sound like something you're going to get rich on, or that you're going to be poor about? And therefore, is it a liability or an asset in your thinking? If it's a liability, where does that fit? Right over there under liabilities.
But it still sounds like an expense to me.
Yes, I get that. Doggone it, I'm internalizing it, you know, it makes a whole lot of sense to me that in fact it is that, but the vernacular of accounting is something you're gonna have to grapple with, just like you did with economics. And though it sounds like it is not. Most often in the real world under GAAP for the general accounts, you're gonna get the word expense associated with it to help you. Now, there are some exceptions. Next week's chart of accounts, you're gonna see an exception that an expense is not an actual expense, but an asset. That's kind of freaky, isn't it? So you wanna talk about dissonance, go into dissonance with that one. So,
Already there.
yes, sorry. But have some degree of competency on this is important. If anything, on the left-hand side, you're gonna have to get some competence. You gotta graduate, frankly, and with a business degree with some competence in this. Otherwise, you're gonna look very foolish in the world of business, honestly. And to have Simpson University represented on there as your diploma, unable to, at minimal, understanding that, is frankly an anathema. It's just not good. So finishing strong in this class and getting a good corporate understanding, we refer to that as corpus, the corpus of the program together, would do you a great favor and be a great blessing in the future. So no, notes payable, current, or accounts payable are not functions of the income statement, but the balance sheet. The truth is, nothing else up there has the word expenses associated with it, known as explicit costs in accounting. Therefore, we're likely now getting down to the bottom line here. So 300,000 minus the 280,000 equals what? $20,000 of, this is the question, of what? Operating income or net income?
Operating.
This is a tough one. I told you last week, be careful with this one. We don't have items in here or here, more specifically down here, that include interest expense, depreciation expense, or tax expense we don't have that down here underneath this line,
So it's not.
that means we gotta move what we had down here as net income up to this line here and eliminate operating income.
So it's
That's right. Therefore, because we don't have interest expense, depreciation expense, now we have accumulated depreciation, but that goes on the asset side, and tax expense, we eliminate operating income here, and we call this what? Net income. Does that make sense? Does that make sense?
Yes.
And if you wanna go on and become CPAs on your CPA exam, you're gonna get something like that, by the way. This is net income. It is net income, not operating income, because the owner of this business decided not to reflect down here interest, taxes, and depreciation, but where do you think you put it? Right there. That's the assumption you're making as consultants. That what was down here as interest, depreciation, expense actually is embedded in here, and when you study the numbers, that's what you're gonna find them. He doesn't care about earnings before interest, taxes, and depreciation. He doesn't care about that. Doesn't care about the ratio down here relative to everything else. He cares about what is my bottom line, and I'm gonna throw everything in the operating expense, and I'm not gonna be worried about the difference between operating income and net income. A lot of businesses like that. So don't go into dissonance when you look at the financials and you don't see operating income, you only see net income at the very bottom. Your assumption is interest, taxes, and depreciations are where? Included in the operating expenses. Okay? That make sense? Good. So this had a $20,000 accounting profit, counting no implicit costs. An economic profit would be a whole lot different factor if we were talking about implicit cost. All right, so that gets us at the income statement, balance sheet. Cross off some of these accounts on this chart here to begin constructing the balance sheet. What did I tell you once again about fungibility? What's the most fungible asset in an organization? Doesn't get any more fungible than that. So we have cash. That indeed is the most fungible asset. No question about that. And that cash here is how much?
$96,000.
$96,000. What's the second most fungible asset?
Accounts receivable.
AR. We learned that last week, didn't we? We get Guido out or somebody out to collect that or change our philosophy in how we collect. So our accounts receivable, define that as AR. Our accounts receivable is how much?
$120,000.
$120,000. What's our third most fungible asset?
Inventory.
Inventory. That's right. Very good, students. Inventory is our third most fungible.
$110,000.
$110,000. Thank you. You're catching on. I do appreciate that. Anything else that would fit within the context of an asset liquidable or fungible with 1 year based upon the chart of accounts up here?
For just 1 year.
Yeah, just within the 1 year.
No.
No?
Would you retain?
That's a good question. Would it be retained earnings? Because
Well, wouldn't retained earnings go under shareholders?
who agrees it goes under shareholders' equity? You're absolutely right. Retained earnings is another name for
Dividends.
dividends, but dividends come from what kind of an account? Say, like a savings account. I remember I referred to it as a corporate savings account, largely paid out for the purpose of dividends. If you're a small business owner, sole proprietor is your legal structure, and you have $30,000 sitting booked as shareholders' equity under that, that is going to be your payday. We call that a dividend. And by the way, if you're in a limited liability corporation, LLC, does everybody know what an LLC is? Did you learn that on business law, LLC? Did you know if you structure your tax return such that you claim in your tax return for the year, for your year, a company not as a straight corp, which you can do, but instead as a dividend corp, that the dividend you pay the small business owner is completely tax-free. None of you know that, but that is one of the methodologies, people who have LLCs that can either file as a straight corp or as a sole proprietor benefit on the dividend side, so that when they get the dividend, it is not ordinary income. It's cool. It's cool stuff. That's a whole nother discussion. It's a loophole in the tax law that those of us who have LLCs tap into all the time. So it is not who you know as much as it is what you know. Right? Okay. But that would be wise to be thinking of that, because if any of your businesses have LLC attached to it and they're not aware of that, that could be a consultation perspective you're going to integrate into your presentation. Or if they do not have an LLC, maybe it would make sense to look at why you would change the legal structure of your entity to be an LLC. Just by the way. All right, so current, when we add up the current, we have our current assets. So our current assets total up to how much? 326,000 for current assets. Does everybody agree with that? But do we have assets that are of value to us more than a year of age? Which is what? Machinery and equipment, right? Machinery and equipment. We'll call that M&E. Machinery and equipment, M&E. Machinery and equipment. How much do we have in machinery and equipment? 700,000. But we have a problem with that machinery and equipment, do we, on the balance sheet, that we can't accurately reflect fair market value. Strike that original market value. What do we got to do to get a fair market value?
Take out the accumulated depreciation.
We do. We do. Now, although we do that, that does not necessarily mean that this is the fair market value today. Things can appreciate. Most things end up depreciating when you drive them, quote unquote, right off the lot. But that does not necessarily mean that, just so you know that as students. But we have to, by way of what we call a contra mechanism, we have to offset, contra is this notion of offsetting in the original Latin. We have to offset this amount here by its depreciation that we have accumulated each and every year. And in this case, we had accumulated depreciation of how much?
234,000.
So accumulated depreciation, how much?
236,000.
236,000 that we have to back off of our M&E to get a more accurate picture of our long-term assets. And how much is that when we do that? 464,000? But does that give us total assets when we do that? Does that give us total assets when we do this? No, it doesn't. It doesn't. What do we got to do? We got to add our current assets with our long-term assets to come up with our total assets. And what is that going to be? This plus that equals this. And what is that for total? What is it?
790,000.
790,000 should be our total assets. Do you agree with that? 326 plus 464 equals 790. Everybody agree with that? Did you all get that? Okay. What's the next easiest structural issue to attack on a balance sheet?
Shareholders' equity.
That's right. In shareholders' equity, what two accounts do we usually find in shareholders' equity?
Retained earnings and stock.
Stock, that's correct. So let's do our retained earnings. We'll define that as R&E, or RE for retained earnings. How much do we have in retained earnings? 420? 120,000 in shareholders' equity. What else do we have? We also have stocks, but how do they define it here? Common stock? All right, so common stock. And how much do we have in common stock?
320,000.
320,000. And that's all we have in this chart, I do believe. When we add them together, what do we have? 440,000. And when we take that, right, this, subtract this, that's what we should be getting when we start adding our things in here. What was the total for the current liabilities? What'd you come up with?
350,000.
So the total, when we come down on the current, is 350,000? Yeah, does it balance when we do that?
Yep.
It does. Assets, 790 equals 350 plus 440, or 790. I'll let you figure out what goes in there, okay? Should be able to do that sitting here tonight. Let's go ahead and take a break. We'll come back at 7:20.
You okay?
Sometimes I wonder what the hell is it.
Don't forget, during your break time, this is when you want to take a look at these.
Yeah.
Yes, please turn in your homework. Thank you for reminding me. Appreciate that.